Hello everybody, this is Toni Turner and welcome to the market now as of about 1 o'clock Eastern on Friday, March the 30th. Before we start, I'd like to wish you and yours a very happy Easter. And now on to the market. Nervous investors are hoping a strong U.S. earnings season, which will start in about a week, can restore some of the optimism that motivated equity markets last year. Imploding technology stocks and fears of a trade war have pummeled the market in recent weeks. We're hoping a robust earnings period could return the focus to fundamentals and could possibly put a floor under recently falling prices, especially those of tech stocks. And on that note, let's look at 3 charts that could give us an insight into just that in the week to come. First of all, as we normally do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 index. Now, as you can see on this chart, the red line is the simple 20-day moving average, the green line is the simple 50-day, and the black line is the simple 200-day moving average. Now, as we know, the SPY made an all-time closing high of $286.58 on January 26. Since then, we've had a very, very volatile run. And as we talked about a couple of weeks ago, the SPY was forming a triangle. And I said about 2 weeks ago, if this triangle keeps forming, if it doesn't break to the upside pretty soon, I suspect it will fall to the downside. We like to see triangles break out 2/3 of the way into the pattern they're forming. And if it takes any longer than that, then you can guess, you won't be exactly right all the time, but you can pretty much guess that odds are the triangle breakout will be a breakdown to the downside. And that's exactly what happened. And the SPY fell down to its 200-day moving average. Now the SPY, now the 200-day moving average, I should say, is coming in at $258.60. And again, the SPY closed, Thursday's close was $263.15. Of course, today is Friday and the stock market is closed for Good Friday. So what we're looking at here is we have the 200-day moving average again acting as potential support. What would be great here is if the SPY could start running higher here on the back of anticipation of really great earnings. I think that is what can pull the market out of this set of doldrums here and push it up higher. We don't want to fall below the 200-day moving average. If that would be to happen, then the SPY would probably make another leg down somewhere toward 248. But if anticipation of earnings season, we've had strong earnings in the last year, certainly, if that can continue, then the anticipation of just that, of strong earnings, could be able to move the SPY back up, back over maybe its 50-day moving average, which is coming in today at $272.62. Then it would be back up above this all-important line. So fingers crossed during the next week that anticipation of earnings season pushes it higher and that earnings come out that are favorable, certainly in the beginning of earnings season, that should help keep the SPY aloft. Again, if it doesn't, if it decides it's not, the earnings aren't very good, then it could roll over, fall below the 200-day moving average. We have another move down, and of course that could prove to be a little bit hectic. So we'd have to get very, very conservative if that were to happen. Now let's go on to the PowerShares QQQ, symbol QQQ. As you all know, excuse me, this is the exchange-traded fund that follows the very important NASDAQ 100 index, the top non-financial stocks in the NASDAQ stock market. The QQQ, a lot of the movement in it depends on The big tech stocks, Amazon, Microsoft, Intel, Apple, Google, Facebook, it depends on those guys. And despite Facebook's recent cliff fall, and it's been quite a cliff fall, the QQQ has managed this time so far excuse me, to remain above its 200-day moving average. Unlike the SPY, which fell all the way down on February 9th to the 200 and then fell down again this past week to the 200, the Qs have been strong enough with stocks like Microsoft and Intel excuse me, moving higher. It's been strong enough to stay above its 200-day moving average. Now again, the Qs closed today at $160.13. In the same way that anticipation of earnings season could push the SPY higher, it certainly could push the QQQ higher. Now we have support down here on the 200-day moving average. Right now is coming in at $152.66. Resistance up here would be the 50-day moving average, which is coming in at $165.83. So we're going to have to see if the Qs have the resiliency here and the momentum to move back up on anticipation of earnings season. And then if that happens, if earnings season is good enough to hold the Qs aloft, maybe at some point we can resume the mighty uptrend they've been in a while. If not, if they have to rest, then again we could see another leg lower, perhaps down to 147, 144. We will keep fingers crossed for the opposite move. Now let's look at a chart we haven't looked at in a long time. This is the Utilities Select Sector Spider Fund, symbol XLU. Top components are NextEra Energy, Duke Energy, Southern Company, Dominion Energy, and it made an all-time high back here on November 30th of $57.23. Now since then, the XLU has fallen pretty dramatically, fell down to a low here of 47.37 on February 6th. That's nearly an 18% drop. Excuse me. From there it rallied up, very, very oversold there on the RSI. The RSI was below 30. From there it rallied up, moved back up, and started creating a base here between about 48.75 and about $50.50. So right now it's churning in this base. It tried to break out Thursday, was unable to do so. I'm going to keep an eye on it this week to see in the coming week if the XLU can break out above $50.80. If it can do that, I may add a small share size to my portfolio. Now, my initial protective stop is going to be down here at 48.70. At 48.70, I want to keep my stop just below the lows of this consolidation here and see if the XLU can start higher. If it can, again, I'll add shares in my portfolio. I'll put an initial protective stop at 48.70. Then if the XLU can break out here and start rising, I'll push my stop up to a close beneath the 50-day moving average. And I'll keep it there for a while and then gradually turn it into a trailing stop. So if you'd like to watch it with me, know that I'm keeping an eye on the XLU in the coming week. Again, a close, 1 or 2 or 3 closes above 50.80 would be nice, with our initial stop at 48.70 and then turn it into a trailing stop if the trade becomes successful. And we can see potential resistance coming in here at 52.87 at the moment anyway from the 200-day moving average, but it's not near enough yet to worry about. Okay, so on that note, we'll go on to next week's economic reports, but first, please join us this coming Monday, April 2nd, for our next session of Tony's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. And now for the coming week's economic reports. On Monday, we have our usual Institute of Supply Management Index. That's a monthly announcement. On Tuesday, we have our auto and truck sales. On Wednesday, we have our monthly ADP employment change, ISM services, and our weekly crude inventories. Thursday, we have our usual jobless claims and natural gas inventories. And on Friday, we have a big report, the monthly non-farm payrolls and the unemployment rate. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. Happy Easter. I'm Toni Turner, and this is the Market Now.